Have you ever looked at a stock that was almost forgotten by Wall Street and then suddenly started appearing on every AI investor's watch list? Well, that's exactly what's happening with NVTS, or Navitas Semiconductor. After its latest earnings report, investors are divided. Some believe this stock could become one of the biggest AI infrastructure winners of the next decade. Others think the recent excitement is getting ahead of reality. So the big question is, should investors buy, hold, or sell NVTS right now? Today we're breaking down the latest earnings report, growth opportunities, risks, price predictions, and my personal opinion on where NVTS could be headed next. And trust me, the final conclusion may surprise you. Let's start with the basics. Navitas Semiconductor isn't trying to compete directly with NVIDIA or AMD. Instead, the company focuses on power semiconductors, specifically gallium nitride known as GaN and silicon carbide known as SiC. These technologies help electronic devices become more efficient and consume less power. That might not sound exciting, but in a world increasingly powered by AI, electric vehicles, and massive data centers, power efficiency is becoming one of the most important challenges. Now let's talk about the latest earnings. The company reported improving business momentum. Management highlighted stronger demand from several growth markets. Investors were especially encouraged by signs that losses are gradually shrinking. That's important because many growth investors don't necessarily expect immediate profitability. What they want to see is progress, and NVTS appears to be moving in that direction. But the earnings report alone isn't why investors are excited. The real story starts with AI, and that's where things become very interesting. Before we continue, comment below, what is your NVTS target price for the next 12 months? 5, 10, or even higher? Let's see what investors are expecting. Now let's talk about the biggest reason many investors are watching NVTS closely. Artificial intelligence. When people hear AI, they usually think about powerful chips from NVIDIA. But here's something many investors overlook. AI doesn't just need computing power. It also needs electricity. A lot of electricity. Every AI data center consumes enormous amounts of energy. And as AI models become larger and more complex, power consumption continues increasing. This creates a massive opportunity for companies that can improve energy efficiency. That's exactly where Navitas hopes to win. Their technology is designed to help power systems operate more efficiently. If AI infrastructure spending continues growing over the next decade, NVTS could potentially benefit in a very meaningful way. Now let's discuss the bull case. Why are some investors extremely optimistic? Reason number 1. The company is exposed to several high-growth industries simultaneously. AI infrastructure, electric vehicles, renewable energy, industrial automation, fast-charging systems. Each one of these sectors could grow significantly over the coming years. Reason number 2, technology leadership. Many experts believe gallium nitride and silicon carbide technologies represent the future of power semiconductors. If that transition accelerates, companies already positioned in this space could see tremendous growth. Reason number 3, size. NVTS is still relatively small compared to many semiconductor giants. That means even moderate business success could translate into substantial stock price gains. And that's exactly why some investors believe this stock could become a multi-bagger over time. But before you rush to buy shares, there are some very serious risks we need to discuss. And honestly, ignoring these risks could be a costly mistake. Now let's discuss the risks. Because every investment story has two sides, and NVTS is no exception. The first risk is profitability. The company is still not consistently profitable. Investors are betting on future success rather than current earnings. If growth slows down unexpectedly, the stock could face significant pressure. Second risk, competition. The semiconductor industry is one of the most competitive industries in the world. Large companies have enormous resources and deep customer relationships. Navitas must continue innovating if it wants to stay ahead. Third risk, execution. A great technology doesn't automatically guarantee business success. The company still needs to convert opportunities into meaningful revenue growth. Now let's talk about valuation. Supporters argue that today's valuation reflects future growth opportunities. Critics argue investors may already be pricing in too much future success. The reality probably lies somewhere between those two viewpoints. Now for price predictions. Remember, these are scenarios, not guarantees. Bearish scenario. If revenue growth disappoints and profitability remains distant, the stock could struggle and revisit lower levels. Neutral scenario. If management continues executing well and revenue grows steadily, the stock could generate respectable long-term returns. Bullish scenario. If AI infrastructure spending accelerates dramatically and Navitas captures a meaningful share of that opportunity, this stock could potentially trade several times higher than current levels over the next few years. Now here's my personal opinion. I see NVTS as a speculative growth stock. It's not a safe investment. It's not a guaranteed winner, but it does have significant upside potential if management executes successfully. Personally, I would only consider it as a small position within a diversified portfolio, because while the rewards could be substantial, the risks are equally real. Now I want to hear from you. Do you think NVTS has the potential to become a major AI winner? Or do you think investors are getting carried away by the hype? Let me know in the comments below. And if you enjoyed this analysis, make sure to hit the like button, subscribe to the channel, and turn on notifications, because we cover high-growth stocks, AI investments, and market opportunities every week. Thanks for watching, and I'll see you in the next video.